morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, July 14th. Market really had a pause day after 10 days out of 11 straight up, and the market doesn't even sell off. It's just literally just stuck in this range now, just held most of the gains pretty much all day. But we want to see where and where this market may be headed here. Do we continue to go higher? But like I mentioned before, 10 out of 11 days, gap up every single day, and no pullback. We had a one-day pullback. It's something that we need to really use caution here. If you're looking to add to your longs, which I would not do, we are into bullish week because of the monthly options expiration. So we'll take it one step at a time. Right now, guys, the spider pin is at 215. Now that could change again tomorrow. But the spider pin SPY is at 215, and we're there now. So I don't see much movement between today and tomorrow. I want to get all of the market makers, want to get all of the options that they wrote to expire worthless so they can capitalize on that. Unless something happens, something comes out, I think that we're probably going to have a slightly maybe down day tomorrow, Friday, but nothing really of significance. So that's my guess until next week. But I want to show you, want to get into some rates. I want to show you the TLT. I want to show you the TNX, the 10-year yield. And in front of you is the 10-year yield itself. Traded today at 140. Why is this important? Well, it affects a lot of things. It affects the banks. It affects gold. It affects equities, right? It affects the dollar. And right now, the U.S. 10-year is at 140. And it did bounce coming off the all-time lows here at 136, I think that was. But this is something we want to monitor, right? I mean, now, because why? Bonds, everybody is long bonds. Everyone. It's a very, very crowded trade. And when rates do get a little stubborn, if you will, and do not go down anymore or make new lows, and this is where I'm going to be watching here, okay? And I also put this on the TNX so you guys can follow if you don't have this the 10-year feed. I'm looking for a slight little move lower, creating a bull flag, and then a breakout. And then obviously we'll worry about where the targets are, but the first target would be that 50-day moving average, okay? 153. No, excuse me, 163. So that's what I'm looking for. And if that does happen, what happens to bonds? Bonds go lower. What happens to gold? Gold goes lower because they love a low yielding environment. And when yields start to rise and gold is at extreme, this is going to be a great trade, okay? And that's what we're going to be watching, okay, in the coming days. Here is the TNX. So again, guys, you can, if you have any type of trading platform, we'll give you the TNX quote. Same thing. What you do is just divide that by 100, and I'll get you to one, virtually to one, the same thing. Right now, it says like a stock at $14, but it's the same thing. 1.468 divided by 100, and you'll get the actual true reading of the 10-year. Same thing. So looking for something up in here in this area at 16 and change for a bounce back up after we fill this gap. See that little gap fill there? That's where I like to use the TNX. We have a little gap fill here. All right, that's going to be gap support. Let's see if we can go into it, maybe pierce it. That'll create a higher low from this previous low and off to the races. And if that does happen, that will put a pause in gold, and that would definitely have bonds sell off. Okay, any weakness, I think I would be looking to myself. Be looking to short TLT. Now here's the TLT, okay, and that's the 20-year Treasury bond. And I just want, these are just new ideas now. These are just kind of putting pieces together of trades, right? So we had a little move lower, and then we gapped lower yesterday, and then we gapped back up again. So where are we looking for? I'm looking for another gap fill here for tomorrow, and then fail. Okay, and it might be Friday, it might be Monday or Tuesday, but I want to fill this gap, which we did. Right now, we got another gap here we're going to fill, and then once we do take that gap out, we're looking for the targets of, this is the price channel now of 137, 138. That's the upper end of this new gap. Okay, so these are the gap areas here. This one's filled. This one is going to get filled, hopefully. Well, it might not. And then we're looking for these areas here. And then, of course, the real area would be here, would be the bigger target area. But let's take it one step at a time, okay? But I'm looking at the TLT, looking for an entry. Let's take a look at some put-call ratios. We're very, very bullish. Sentiment is extremely high. We're at 53, okay? You can see here. And every time we get down to these areas, what happens? Market sells off a little bit. See that here, right? And well, this is just now, but if you'll see here, right? Look at here, market sold off here as we got down to this area. So important to keep an eye on things. I think the market got ahead of itself um, way too fast, too hard to the upside. And that's because of those algorithms, should be banned. But it is what it is. That's the trade environment that we're in, and that's what we have to change and adapt as traders. Here's the VIX, VIX. You could see here, big area of support. It would not surprise me if we actually pop lower and breach the support to hit the lower levels like 1130, 1140-ish, and then start to really rally hard here, okay? That's what I'm looking for. I had one of the subscribers said, she's looking for 8 or 9, and I said it, one little small little sentence. It is possible in this crazy market, and I'll tell you that would be a great little buy if we can get down there. But yeah, if that's going to case, if the VIX ever got to 8 or 9, the ES is probably going to be at 21, 2200, 2250. So let's see if it does get down there, and if it doesn't, let's look for clues. We want to see what? We want to see those Bollinger Bands. Those Bollinger Bands, we want to see them curl back up again so they can take the Bollinger Bands out, just like here. That would create the buy signal. Right now, there's no buy signal in the VIX at all, but we are working on it. Okay. VXX, one of the instruments I like to trade when I'm trading volatility. You can see here we have no buy signal here yet. I'm looking for that move out of that band. Okay, like here, we get a little pop. Right now, that has not happened. All right, so just wanted to let you guys know that. Now let's go into the dollar UUP. Also, the dollar needs to be looked at because it does affect equities and, of course, the commodity sector. Right. Small little bull flag here. We broke back out. Now we're basing right on the 200-day moving average. To me, this looks like this is going to go higher yet again. Once we take out this bull flag, I'll start putting some targets up here. That will eventually put a little pressure on gold. Now, it all depends on what the market's at, the dynamics of the markets at the moment, right? Because why? Well, because if gold is acting as a safe haven trade, so is the almighty dollar. So they can go up. They can be correlated instead of inversely correlated as they usually are. So just keep that in mind. But when I see gold, if the dollar really starts to break out here hard, you'll see a knee-jerk reaction in gold. All right, so let's take a look at this spot. You can see here the index is going to blow through. Nothing has happened here. We got gap fills all the way up. Amazing. Here, a little bit down, and then here. Every day up, gap up. And that's really what the day trader, you don't want to see that. You don't want to see a nice open at or near the close, and then decide where the trends are going to be. And that's how the easy trades actually happen. Okay? Next is going to be the 30-minute. Why don't you show you this now? Bollinger Bands are tightening, guys. That means we're going to have another big move. Just like I mentioned, you see here how Bollinger Bands were really tight, and we had a big move up. Bollinger Bands were tight in here. We had to move lower, okay? And then we had the consolidation. So Bollinger Bands are pinching. That means that it's building up pressure. So let's see what happens today, if this market can break out or at least break down and sell off a little bit. Here's the 60-minute. I've been showing you negative divergence here. So we have negative divergence now actually forming really nicely. Okay, lower high from the RSI top here. MACD actually got a signal line cross rolling over while the price is hanging up here. So negative divergence, 60 minutes. Just use caution. I could even write this in. I could even draw. Let me see. Maybe not. Maybe draw like a wedge pattern here. Yeah, I could actually get a small wedge out of this. No, I can't. All right, so you got an uptrend channel. We got to see this break here, 214.26. Again, just sampling some of the premier video charts that we use. And man, I'll tell you guys, it's so true to price. When you see a breakdown or break above it, you really have to take a look at the videos. Premium video, go take a look at tradingmarkettechnicals.com. There's a sample video on site. All right, and then transports, you could see just nudging its head above that area of support. But again, needs to really prove itself a little bit more. And this is a little bit extended. All right, IWM, you can see the targets I put out yesterday, 120, 122, very, very big area of resistance. So it's going to need to prove itself. And this thing, this index, the IWM, the Russell 2000, is still the weakest, and it's a secondary leader to the transports. IWM daily, you can see here, a little bit of a pause, and the market's really just pause in general. So we need to see the market either take out yesterday's low, okay, for this morning's trade. And if that does not happen and we start taking out the highs, which is obviously we will basically close on change, then I think we're going to have another run at it. But remember, the spider pin is 215. We're there now. All right. Have a great day. We'll see you tomorrow, guys.